Now, on Friday, U.S. Central Bank Chairman Jerome Powell reiterated that there was no sign of relief for millions of Americans currently facing the brunt of rising inflation in the near future. He said that taming inflation will inflict pain on American families and businesses. And his words have sent U.S. stocks into a tailspin, with markets tumbling 3%.
Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
Powell delivered a strong message at the annual gatherings of central bankers in Jackson Hole in Wyoming. He said that the Feds will likely impose more large interest rate hikes in the coming few months and is focused on controlling the highest inflation in near 4 decades. Now, the announcement comes as a disappointment to American investors who hoped that the Feds will moderate its interest rate hikes later this year. U.S. Federal Reserve has been on an aggressive campaign to raise interest rates, and Powell made it clear that the fight against inflation is not over. The Fed has hiked interest rates 4 times this year, including the massive 3/4-point rise in June and July. Now, the current interest rates at the range of 2.25 to 2.5% are unheard of since the early 1980s. And at the gathering, the Fed chair reiterated that another 3/4-point increase can be appropriate at the September policy meeting. Listen in.
In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer-run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook.
And for more of this, our correspondent Susan Tehrani has sent us this report from New York. Take a look.
In his hotly anticipated speech on Friday, Fed Chair Jerome Powell delivered a stark message. Inflation will continue to remain high, and cooling it down will require forceful measures that will likely inflict more pain to Americans nationwide. Even with 4 consecutive interest rate hikes and 2 back-to-back 75 basis point increases, Jerome Powell said that the Fed was not in a position to, quote, stop or pause. Powell's comments confirmed that the Fed is determined to fight inflation at any cost, even if it means further slowing consumer demand or even failing to achieve that elusive soft landing that it was talking about, or even triggering a recession. While inflation did come down slightly in the month of July, Powell said that was not enough and it was not significant. And so while many Americans are feeling the inflation flame at the grocery store generally and at the pump as well, perhaps more pain is on the way before any relief. Susan Tehrani reporting from New York for WION World is One.